This website shows the list of former, closed, or completed SPACs. Here we can see the most recent Lucid-Churchill merger, which charted on July 23, 2021. But what we don't see is the merger of Universal and SPAC because it failed to close the deal, which could have also happened to the Lucid-Churchill merger when the merger was put on hold due to the delayed approval of second proposal. Today, we're going to discuss the failed SPAC agreement between Universal and Bill Ackman's Pershing Square Tontine Holdings. What went wrong, and was this the largest transaction failure in SPAC history? Welcome back to NewVehicleMedia, where we discuss electric vehicles and their stocks. Today, we're taking a small detour to zoom in on a failed merger deal unrelated to our main topic. Our goal is to point out how fragile these deals can be and to identify the investment risks of these upcoming merger trends. First, let's introduce both companies so we can go through the video smoothly and have little to no trouble in delivering the information. Universal Music Group, or UMG, is a global music organization controlled by Vivendi, a French media giant, with Tencent, a Chinese tech company, holding a minority stake. Universal has its corporate headquarters in Hilversum, the Netherlands, and its operating headquarters in Santa Monica, California. It's one of the big three record labels, together with Sony Music and Warner Music Group, and is the world's largest music company. In March 2020, Tencent paid €3 billion for a 10% share in Universal Music Group. Then in January 2021, it paid another €3 billion for an additional 10% stake. Universal Music Group was named as one of the most innovative music companies by East Company in 2019. It was listed in the top 50 most innovative companies in the world and has signed licensing agreements with more than 400 platforms worldwide. Pershing Square Tontine Holdings, also known as PSTH, is a special purpose acquisition company much like Churchill Capital, mostly known from the Lucid merger. The company does not have a large number of operations. Its purpose is to complete a merger, capital stock exchange, asset acquisition, stock purchase, reorganization, or other similar business combination with one or more companies. The company was founded in 2020 and is headquartered in New York. It works under its parent company, Pershing Square Capital Management, PSCM. Bill Ackman is the PSTH's chairman and CEO. He has worked in the investment management profession for 28 years, the last 16 as CEO of PSCM. Historic events. Ackman's Pershing Square Tontine Holdings stated on Friday, June 4th, that it was in talks to buy 10% of Universal Music Group. UMG was valued at €35 billion, that is roughly $42 billion. The deal comes ahead of Vivendi's intentions to list Universal Music Group in the Netherlands in late September. Vivendi has previously stated that UMG would be split out as a separate company that would trade on Euronet after they distribute 60% of Universal stock to its shareholders by September. PSTH later that month, on June 20, 2021, confirmed that it had reached a definitive agreement with Vivendi, UMG's main owner, to buy 10% of the company's outstanding ordinary shares for $4 billion. The acquired UMG shares were meant to be distributed to PSTH shareholders later on 15 September 2021, once Vivendi completes the previously announced separation and listing of UMG on Euronext Amsterdam. Unlike most SPAC acquisitions, in which a publicly traded shell company reverse merges with a private startup to take the company public without going through the traditional, lengthy IPO process, PSTH's plan will invest in UMG and distribute equity to its shareholders before the record label spins off from its parent Vivendi later this year. In constructing a bid like this, to take Universal Music Group public, Bill Ackman's Pershing Square Tontine Holdings launched one of the most complicated SPAC deals the market has ever seen. To avoid rehashing the details, the deal would have resulted in the formation of a new type of purchase firm, the Special Acquisitions Rights Company, SPARC. The deal is so bizarre that it got a chuckle from CNBC host David Faber during a confusing 3-minute explanation of the transaction's terms. Never a good indication. This innovative and unexpected deal by the largest ever special purpose acquisition company has investors both confused and concerned. That's why the market reacted quite differently on the announcement date and reopening of the market. After Ackman's Pershing Square Capital revealed details on the potential deal for PSTH, the stock plunged as much as 14.9% to $21.33 and ended the day down 11.94% at $22.06 on Friday, June 4, 2021. But when the market reopened on Monday, June 7, 2021, PSTH stock rose as high as 6.8% to $23.55. The stock closed at $23.03 with an increase of 4.4% from the previous day. The stock closed at $22.76. The deal seemed to continue smoothly. However, in a shocking letter to shareholders on July 19, 2021, Ackman announced that the acquisition is off the table due to issues with the SEC and a negative reaction in PSTH's share price. He further added that the UMG transaction will instead go through with Pershing Square Holdings. The PSTH stock dropped to $20.13 on that day. Pershing Square Tontine Holdings disclosed that the SEC cited many issues to the deal structure, including a possible contradiction with the New York Stock Exchange listing regulations, leading the SPAC to determine that it might not be able to complete the acquisition of a share in UMG, resulting in the failure of the merger. The conclusion: SPACs grew in popularity partly as a result of investors' desire to invest in private enterprises that typically only accept funding from hedge funds and venture capital organizations. Early investors have already gained from their investments several times over by the time a private business has had an IPO. PSTH's proposal for Universal accomplishes this goal, but only for a small portion of the highly valuable firm, and the upside may not be as great as some had hoped. Universal Music Group is a stable firm, with most of its successful labels producing the most hits of the three big labels. They should also profit from economies of scale as the world's largest music firm. UMG is worth more than 24 times its 2020 earnings before interest, tax, depreciation, and amortization if a market leader receives a premium over its competitors. PSTH experimented outside of the regular approach of SPAC's core business when acquiring Universal Music and moved on to develop an SPARC, a special-purpose acquisition rights business. Unlike a traditional SPAC, which aims to raise money from investors before investing in a private company with the intention of going public within 2 years, a SPARC will select the target company and giving the investor an option whether to invest or not. It did so by issuing forward purchase agreements, which did not appear to be a problem at first glance, but they caused too much confusion for the investors, who reacted very differently to the situation and possibly a cause of the failed merger. What were your thoughts on Mr. Ackman's unconventional thinking? Is he overthinking the problem, or is this going to be a game changer for the future of SPAC deals? Jason believes that Lucid Group is the future, and being part of that is awesome. The merger between CCIV and Lucid Motors made that possible. Do you feel the same way? Are you part of the Lucid Group too? That should wrap up things for today. Remember to like and subscribe to the channel. Thanks for watching.